Welcome to the deep dive.
Great to be here.
So today we're venturing into the pretty dynamic world of digital assets.
It really is evolving fast.
Absolutely.
Yeah,
And look, your curiosity, our listener, is really what sparked this whole exploration. It's a financial landscape that's, well, changing constantly.
it is. And we've pulled together quite a bit of information, mainly drawing from this book, Crypto Wisdom, How to Research.
Right. So our goal, our mission, if you like, is to unpack what these digital assets actually are.
Uh-huh.
How blockchain, the technology behind it all, interweaves with them.
Yep.
And crucially, how you can approach researching this space effectively. We
Oh.
want to give you a solid understanding, but, without making your head spin.
Exactly, because it can seem like a real maze at first glance, can it?
Totally.
But, like our source material points out, if you take a systematic approach, it really does help transform that complexity into, well, clarity.
Okay, let's get down to basics then. According to Crypto Wisdom, what are digital assets,
Yeah.
essentially?
Well, the book defines them pretty broadly.
Hmm.
Basically anything that exists in a digital format.
Like crypto, Bitcoin, Ethereum.
Yes, exactly. Cryptocurrencies are a major part, but it also includes a wider range of things like digital tokens. And the really revolutionary part is that they're often built on blockchain technology.
Blockchain, it's the term everyone hears.
Uh-huh.
How does that connect?
Mm.
What's the link with digital assets?
Yeah, good question. The book describes blockchain as this foundational, decentralized digital ledger.
A ledger, like a record book.
Kind of, yeah. Think of it like a shared tamper-proof record book. It uses these things called consensus mechanisms.
Like agreements.
Sort of, yes. Digital agreements between all the participants,
Hmm.
and they ensure every transaction involving these digital assets is checked, verified, and legitimate.
Okay.
And this all happens securely, transparently, and often without needing the usual middlemen, the traditional banks or processors.
So it can cut out the middleman, streamline things.
In many cases, yes, precisely. And the book really highlights several key properties that make digital assets quite compelling.
Like what?
Well, portability, you can send them across borders easily. Divisibility, you don't have to buy a whole Bitcoin, you can own just a fraction.
Right, that's important.
And crucially, scarcity. Many are designed with a limited supply, which can, really influence their value. Put those together, and they become an interesting thing to consider for maybe diversifying investments.
Which brings us to the really interesting part. Why the huge surge in interest? What's pulling investors towards digital assets?
Yeah, the book lays out several strong drivers. First off, the potential for pretty significant returns.
The big one.
Definitely. Now, the market is volatile, no doubt about it. But that same dynamism has also led to substantial growth. Bitcoin's journey is like the poster child for that.
True. From practically nothing to huge value. That catches attention.
It really does. But, the book also sort of cautions that these are early stage technologies. They often have these rapid growth spurts and then adjustments. So the key isn't to panic sell at every dip.
But to understand the potential and do your homework first.
Exactly. Research is key. Then secondly, diversification.
Yes, you mentioned that.
The book notes they don't always move in lockstep with traditional stocks and bonds. Bitcoin actually saw gains during some of the market turmoil in 2020, so it can potentially act as a hedge sometimes.
That probably surprised a lot of traditional investors.
I think it did. Then there's the decentralization aspect and the security that comes from blockchain transactions being, well, basically unchangeable. Once it's on the ledger, it's incredibly hard to alter.
Immutable, they call it.
Right, immutable. And finally, you just can't ignore the increasing mainstream adoption.
Yeah, it feels like it's everywhere now.
Well, maybe not everywhere yet, but the book gives examples like Tesla putting Bitcoin on its balance sheet or PayPal letting users buy and sell crypto. These aren't just niche things anymore.
Okay, so the foundation is set. We get what they are, why people are interested. Now, the million-dollar question.
Mm-hmm.
How do you even start navigating and researching this huge space? The book must give some pointers there.
Oh, absolutely. It really stresses understanding the crypto markets themselves, especially the exchanges where these assets are actually traded.
The marketplaces.
Exactly. And it breaks down the research approach for different types. Centralized exchanges, or CEX, decentralized exchanges, DXs, and even looks at online crypto brokers and investment advisors.
Okay, let's start with the big ones people usually hear about, centralized exchanges, CEXs. What are the key things we need to look into? The book has checklists, right?
It does, yeah, very helpful checklists. First and foremost, reputation.
Makes sense.
The book suggests really digging into reviews and ratings, Check sites like Trustpilot, maybe forums like Bitcoin Talk, Reddit, see what actual users are saying.
Like the word on the street.
Kind of. And building on that reputation point, you really need to look into the exchange's history. Have they ever been hacked? Any major security breaches? Any dodgy dealings in the past?
Right, you wouldn't trust your money somewhere with a shaky past.
Yeah,
It's like checking a restaurant's hygiene rating.
good analogy.
Yeah.
Then regulatory compliance. This is a big one.
Regulations. Right.
Look for exchanges that are properly licensed and regulated where they operate. It shows they're adhering to legal standards, AML KYC rules, anti-money laundering, know your customer.
Okay.
And tied to that is security features. The book points to things like two-factor authentication 2FA as vital. Also, do they keep most funds in cold storage, meaning offline, and use things like SSL encryption for their website?
These sound like the digital locks and vaults you'd expect.
They really are. Essential digital security. Then you need to look at trading volumes.
How much is being traded?
Exactly. Higher volumes usually mean better liquidity, so it's easier to buy or sell without the price moving too much against you. CoinMarketCap is a good resource the book mentions for checking this.
Good tip. Liquidity matters.
Definitely. And of course, fees. You've got to compare their trading fees, withdrawal fees, etc. with competitors. Make sure you're getting a fair deal.
Yeah, fees can eat into your returns if you're not careful.
They absolutely can. Then there's the user interface, the platform itself. Is it easy to use? Intuitive. Especially if you're new to this. The book even suggests trying out the platform yourself, if possible, maybe with a small amount.
Good idea. Test drive it.
Right. Also, consider the range of assets. Does the exchange actually list the specific cryptos you're interested in trading?
Do they have what you want to buy?
Pretty much. And look at their roadmap, too. Are they planning to add new, potentially interesting assets in the future?
So, like, checking if your favorite shop plans to stock new items you might want later.
Yeah, something like that. Customer support is another one often overlooked until you need it. How responsive are they? What channels do they offer?
Crucial when things go wrong.
Absolutely. And finally, the team behind the exchange. The book advises researching their background. Who are they? What's their experience in crypto and finance? Are they public figures? What about past projects, community involvement, partnerships? It's all about gauging their credibility and expertise.
Wow, okay. That's a really thorough checklist for CEXs.
Yeah.
What about the other side of the coin? Decentralized exchanges, DEX. How's the research different there?
Well, the book offers a similar framework, but the focus shifts a bit because of the decentralized nature. Reviews and feedback are still important, of course.
But security.
Security is arguably even more critical on DXs because often you're the one holding your private keys. You have more direct control and responsibility.
Right, you're your own bank, essentially.
In a way, yes.
Yeah.
So look carefully at their website for security info. Do they use things like multi-signature wallets that requires multiple approvals for transactions? Do they have bug bounty programs where they reward people for finding security flaws?
So you're looking at the platform security, but also realizing your own security practices matter hugely.
Exactly. Then you look at trading pairs. What assets can you actually swap on the DX? Check the liquidity for those pairs. Look at the spreads, the difference between buy and sell prices. Some traders even look for arbitrage opportunities between DX and CEXs.
Okay. Ease of use still relevant?
Still relevant, though some DXs can have a steeper learning curve than CEXs, and fees naturally compare them. And just like CEXs, investigate the team or the community behind the DX project.
Got it. Now, the book also mentioned online crypto brokers and investment advisors. What's the research angle there?
Right, and the book draws a helpful distinction. Brokers mainly just execute trades for you. Advisors offer actual advice, strategy, maybe broader financial planning that includes crypto.
Different roles.
Very different. For both, but especially for advisors, you must check their qualifications and experience, specifically in crypto and blockchain. This space is unique.
Yeah, you wouldn't want someone learning on your dime. It's not like asking a generalist about heart surgery.
Exactly. Check their regulatory registration. Are they properly registered? Do they have any disciplinary history? That's public information usually.
Transparency is key.
Absolutely. And transparency on fees, too. How are they calculated? Get that crystal clear up front. Ask for references or case studies if possible. For advisors, it's vital they understand your goals, your risk tolerance.
They need to tailor the advice.
Precisely. What's their investment philosophy? How often will they communicate? How involved will you be?
That communication part builds trust, doesn't it, in any financial relationship?
It really does. And finally, security again. If they're holding your assets, how are they securing them? The book mentions things like multi-sig protocols, insurance, regular audits, secure communication, maybe even IP whitelisting for your account access. Dig into those security measures.
Okay, so we've covered where to trade, who might help, but where do you actually store these digital assets safely? Crypto wallets, the book dives into those too.
It does, yeah, in quite a bit of detail. It lays out the different types. You've got digital wallets, often the ones provided by exchanges.
Convenient, but maybe less secure?
Generally, yes, because the exchange holds the keys. Then desktop wallet software on your own computer, mobile wallets apps on your phone, online wallets web-based, sometimes offering more features or privacy than basic exchange wallets.
Okay.
Then the big guns for security, hardware wallets, physical devices like a USB stick that keep your keys offline.
The most secure option.
Generally considered the most secure for long-term holding, yes. And then, interestingly, paper wallets.
Paper, like printed out.
Literally, yeah. Printing out your private and public keys can be very secure if you protect that piece of paper like gold, but also risky if it gets lost, damaged, or stolen.
Wow. Sounds almost old-fashioned, but I see the offline security appeal.
It has its place. The book goes through the pros and cons of each, usually that trade-off between convenience and security level. It also gives some general steps for setting up and funding each type.
And the absolute golden rule, the number one thing with crypto wallets is
Backup, 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 backup. The book hammers this home. You must securely back up your seed phrase, that list of words that can restore your wallet and your private keys. Keep them safe, offline, maybe in multiple locations. If you lose your device and your backup, your crypto could be gone forever.
scary thought.
It is. It also explains sending and receiving crypto using public addresses and really stresses the need for accuracy. Double, triple check those addresses. Sending to the wrong one. Well, it's usually irreversible.
Ouch. Yeah, definitely a measure twice, cut once situation.
Yeah.
Or measure 3 times.
Absolutely. And the book clarifies who holds the keys, which we touched on. With CEXs, the exchange usually holds them. On DXs, you hold your own keys. Brokers and advisors typically store client assets in their own secure institutional wallets, hot or cold, with strong security.
Right. Understanding who controls the keys is fundamental.
Yeah.
Okay, we've got the infrastructure, exchanges, advisors, wallets. Now let's talk about the assets themselves. What are the different types of digital assets out there, and how do we research them specifically? The book must break them down.
It does, very helpfully. It covers several categories: cryptocurrencies themselves, non-fungible tokens, NFTs, security tokens, utility tokens, payment tokens, stablecoins, and even central bank digital currencies, or CBDCs.
Quite a list.
It is. And for each one, it gives specific research pointers.
Okay, let's start with one most people know. Cryptocurrencies. Bitcoin, Ethereum, Cardano, Dogecoin, all those. What's the research game plan there?
The book provides a solid 10-point checklist. Number 1, understand the core technology. How does it work? What are its security features? Can it scale? How is it governed? Read the white paper.
Okay, tech first.
Second, vet the team. Who's behind it? What's their track record? Are they transparent? How do they engage with the community?
People matter.
Critically. Third, analyze market demand. Is there a real need or market for this crypto? Who's the competition? Fourth, check the code and security. Is the code open source? Has it been audited by security professionals?
Technical due diligence.
Exactly. Fifth, token economics or tokenomics.
Yeah.
How are the coins distributed? What's the total supply? Is it inflationary or deflationary? What's the coin actually used for within its ecosystem?
The supply and demand mechanics.
Right. Sixth, analyze the competition directly. How does it stack up against similar projects? Seventh, look for partnerships and real-world adoption. Is anyone actually using it? Eighth, gauge the community. Is it active, positive, engaged? Check social media, forums.
Community can be a big driver.
Huge. Ninth, keep an eye on the regulatory landscape. How might regulations affect this specific crypto? And 10th, what's the future roadmap? What are the team's plans for development?
Wow, that's comprehensive. It's like researching a tech company, an economy, and a social movement all rolled into one.
That's a pretty good way to put it, actually. Now, for NFTs, those unique digital items, collectibles, art.
The JPEGs people pay millions for.
You're kidding, mostly.
Well, sometimes. Research there shifts focus a bit. You're looking at popularity and demand. What are the trading volumes on marketplaces like OpenSea? What's the buzz on Twitter or Discord? Social proof and market activity.
Yep. Then the underlying tech. Which blockchain is it on? Does it have unique features? Also, who's the creator or the team behind the NFT project? Their reputation matters.
Right.
Consider the utility. Does owning the NFT grant any perks, access, or rights beyond just ownership? What's the legal status regarding copyright or IP? Assess the financial potential based on trends, scarcity, and create a reputation. And crucially, like with cryptos, follow and engage with the community.
Yeah, NFT communities seem especially tight-knit and influential.
They really can be. Okay, next up. Security tokens. These are interesting because they represent ownership in real-world assets like equity in a company or real estate, but on the blockchain.
So, bridging traditional finance and crypto.
Exactly. Which means regulatory compliance is absolutely paramount here. How is the token classified legally? Which securities laws apply? You might even need legal advice. You have to analyze the underlying asset itself. What are you actually getting a piece of? Evaluate the token structure. What rights does it confer? Dividends, voting. Review the smart contracts and tech. Assess market demand for this kind of tokenized asset and understand the exit strategy. How can you eventually sell?
Sounds like you need both traditional investment analysis skills and crypto tech understanding for those.
You really do. Then we have utility tokens. These tokens grant access to a specific product or service on a network. Think of them like digital keys or access passes.
Like Filecoin for storage or BAT for attention on the Brave browser.
Exactly like those. Research here focuses on what's the purpose of the token? Is the underlying product or service valuable and in demand? Evaluate the team. Can they deliver the service? Review the tech. Analyze the tokenomics. How does the token function within the ecosystem's economy? Is there enough liquidity? What's the roadmap? Assess regulations related to the utility it provides. Look at partnerships driving adoption. Follow the user community. And again, consider the exit strategy.
So with utility tokens, it's all about, does this thing actually do something useful? And is there a sustainable model around it?
That's the core question. Okay, payment tokens. These are designed primarily as a medium of exchange, like Bitcoin originally or Litecoin, Dash, Ripple.
We're sending money.
Essentially, yes. Research involves what's its specific purpose or value proposition as a payment method? Is there market demand for it? How good is the underlying tech for payment speed, cost, security? How much adoption is there? Are merchants using it? What are the payment regulations? How liquid is it on exchanges? Any key partnerships? Strength of community and long-term viability.
So does it work well as money, basically? Speed, cost, acceptance.
Pretty much. Then stablecoins. Their whole point is to maintain a stable value, usually pegged to something like the US dollar. Examples like Tether, USDT, USD Coin, USDC, DAI.
The less volatile cryptos.
Right. Research here is critical because you're relying on their stability. Understand the mechanism they use to keep the peg. Is it backed by real dollars in a bank? Fiat collateralized, backed by other crypto collateralized, based on algorithms. Transparency is huge. Do they publish regular audits of their reserves? Assess market demand and actual usage. Who backs it? What's the team like? Analyze competitors. And, crucially, check regulatory compliance and ongoing scrutiny.
Because if a stablecoin loses its peg, well, that undermines the whole point. Trust is everything.
Absolutely. Finally, the book touches on CBDCs, central bank digital currencies.
Digital versions of the yuan, euro, dollar?
Exactly. Issued by central banks themselves. Research here is different again. You need to understand the concept. Why are central banks doing this? Look at the specific design choices. What are their stated goals? Efficiency, financial inclusion, more control. What are the potential risks and challenges? Privacy, economic impact. And then research specific CBDC projects individually, their governance, tech, privacy features, likely impact.
That's looking at government policy and macroeconomics as much as technology.
It really is. The book then zooms in on researching the blockchain technology itself. It talks about the different layers, like the application layer, what users interact with, the consensus layer, how agreement is reached, the network layer, how nodes connect, the data layer, how data is stored, and the cryptographic layer, the core security.
Breaking down the engine.
Right. It provides checklists for researching each layer, looking at things like security, scalability, decentralization, performance for each component.
So you can understand the strengths and weaknesses of a specific blockchain's architecture.
Precisely. And then there's a big section on DeFi, decentralized finance.
The alternative financial system being built on blockchain.
Yeah. Researching DeFi projects involves looking at their specific tokenomics, the market size for the financial service they offer, lending, trading, insurance, the team and advisors, the tech platform they use, the security of their smart contracts. Have they been audited? That's a huge one.
Smart contract bugs could be catastrophic in DeFi.
Extremely. You also look at the community, market cap, exchange listings, how liquidity is provided, and, of course, the competition.
DeFi feels like the Wild West sometimes, so that deep research seems extra important.
It really is. The book also details researching specific consensus models more deeply. Proof of stake, POS, delegated proof of stake, DPoS, proof of authority, POA, Byzantine fault tolerance, BFT. For each, it outlines what to look into, how validators are chosen, rewards, security assumptions, energy use, governance, community.
Understanding how the network stays secure and agrees on things is fundamental.
Absolutely critical. It also introduces on-chain analysis.
Looking at the blockchain data itself,
Exactly. Interpreting transaction data directly from the blockchain to get insights into network health, user behavior, potential whale movements, even spotting illicit activity sometimes. The book gives checklists for analyzing metrics like transaction volume, fees, miner validator rewards, and how those rewards are distributed.
like being a digital detective, analyzing the public ledger.
A good way to think of it. And finally, it briefly touches on metaverse research.
Virtual worlds.
Yeah, these immersive virtual spaces where people interact, own virtual land, use NFTs. Think Decentraland or the Sandbox. The book suggests keeping an eye on how metaverses are developing and how they intersect with digital assets, potentially impacting markets or creating new use cases, even in areas like medicine or finance down the line.
The lines are blurring between the digital and physical, and assets are part of that.
Seems that way, yes.
Okay, wow. We've covered a lot of ground pulling from that crypto wisdom book. If we were to bring it all together, what are the main takeaways from this deep dive?
I think the biggest takeaway is that the book gives you, the listener, a really solid foundation. You get an understanding of what digital assets actually are, why blockchain is so crucial to them, and most importantly, a comprehensive framework for doing your own research.
The toolkit, almost.
Exactly. We've walked through evaluating exchanges, securing wallets, understanding the different flavors of assets from crypto to NFTs to stablecoins, and even digging into the underlying tech like consensus models and DeFi. The key message from the book, repeated throughout, is the need for a systematic research approach.
Don't just jump in based on hype.
Please don't. No. It's about being methodical, being critical, doing your homework to reduce risk and make informed decisions. This space moves fast and things can change quickly.
It definitely provides that detective's guide we mentioned earlier, a way to investigate before you invest time or money.
Well put. And listeners should remember, this deep dive, it's really just the beginning, isn't it?
A starting point.
Definitely. The digital asset world is incredibly dynamic. Things are always changing, new products launching, new tech emerging. The book itself, as you noted, has lots of links to websites for real-time data, news, tracking tools. Those are resources to actually use.
So for everyone listening who's now thinking, okay, I want to learn more.
Use the strategies we talked about, the checklists from the book, the resources mentioned. Use them as your launchpad. Keep exploring, stay curious, keep learning. It's a fascinating field.
Couldn't agree more. And on that note, maybe a final thought for you, our listener, to chew on. We're seeing digital assets weave their way into more and more parts of our lives, aren't we? From finance, obviously, but also into these virtual worlds, into culture. So thinking ahead, what fundamental shifts do you foresee in how we even define value and how we interact with it in the coming